Good morning, all. January the 10th. Take two of today's podcast. We moved to a new computer and apparently the audio wasn't on. So let's go through this again real quickly. I know it's later in the morning. But if we go through overnight, we can see more of the same. Continuation of the selling that started last week. We have fair value down around 20 handles on the SPUs and over 200 on the NASDAQ. A couple of big events in that as well, just the general selling on Omicron, fear of higher rates, and other things. We had a few stocks that are down quite sizable. Lululemon, L-U-L-U, or Lulu, lowered their guidance or warned. They're down about $20, over 5%. Airbnb was downgraded by Piper Sandler. They're down about 6%, $6, about 3%. The 10-year yield, and that's what's also getting this going, is back around that 180. Remember, that was a high around there on Friday after the jobs report. So that's up 3 basis points. We were up in Hong Kong and China overnight, up in India, down a tad in Australia, basically flat, and down in South Korea. Germany, through all of Europe, is down, other than Spain, and Spain's been the weakest. That's up a tad. We also had Take Two is down about nearly 9%, down about $14, $15 after they bought out Zynga. So that's Take Two's TTWA, the gamer, and Zynga is ZNGA or ZNGA, which is up about $3, which is 50%. Kudos on people that have been holding that. Lots of bag holders on that, so they got rewarded for that. So not a lot out economically today. The market is pretty well looking at rates. The reaction there, we have, as we said in the weekly report, we have Jerome Powell up tomorrow for his confirmation. So it's going to be, obviously, it's going to get a lot of questions on the state of play in the economy with Omicron, obviously with inflation, rising rates, and the like. On Thursday, Brainard is up for her nomination. We have CPI out on Wednesday and PPI on Thursday. So these are all events that are making the bond market very nervous. And obviously, what we're getting is the market's getting totally one way. All shorts, all bears, and reactionary. No better place to look than that in the stock market, where we constantly see the same people that were over the top bullish. You can see that on NASDAQ and the so-called growth stocks on the Russell, over the top bullish there, and now over the top bearish. Like a lot of them, I get it. It's just following. So the whole, other people, whether they got following, analysts there, subscribers, all that sort of thing. So that's why you want to have a clinical plan. In other words, you should be selling up here, not down here. I'm not saying don't sell here, the trend's down. But if we look at NASDAQ, this is the one that kind of grinds a lot of our wheels that are from one certain side of that whole game, is all the buying the dip. Yes, it works. But the difference is they cycle out the good and the bad, right? So this was pretty well all Apple, right? $3 trillion, it happens and it breaks. But the fast money stocks, the ones that don't make money, have a limited lifespan unless they raise capital. They're down, massively. I mean, Apple's down 168 now but obviously there's a bit of difference to Apple to some of them. Anyway, classic fail here, double top. This is where it got, remember we held the top of that channel very nicely. So the cloud and the channel here. And then, so that's where you want to look. The fail to hold, it's like when you do a spit on Mario Math. And this was at plus 1.8. So that was that good sell we're talking about. Now, and then on Friday, we opened under here. And we've obviously traveled down. This was its breakup point that we're testing now on the daily. We have a lot of room below here, Murray Mathwise, as you can see. This is a daily chart, and we have the and what we put on the weekly report. You'll see all that. The Dow has been the beacon, I guess, the late starter. So traditionally, the Dow is meant to be representative of the overall economy. So you look at positive and negative divergence with other indexes. So the big clue to the whole what's going on now is the Russell index, which is the smaller non-profitable, was slagging forever against the other indexes, right? So that's your big clue right there. And then the Dow was actually up the strongest until just the other day, right? Then it finally broke down of everyone else. And so right now, we're only down, we're down under 100 versus what we're seeing in NASDAQ. So you can see it's building a more creative pattern. However, should everything go down, the whole sink get thrown out with the whole lot there. A bit early to get those right, but we have the support here at the Tankin and the Cajun all the way down here, and this is our channel. And if those that are familiar with Babson's work or median, you see it spinning around the middle there. Pretty simple. Bigger picture on the S&P. Remember we had that broke that Tankin. We've come back here. Right, and let me just upgrade something here for you. We were looking at, I just want to show you something different. So we had the 200 up just for, we were looking at that a minute ago. 50 is our go-to on that. And you can see what's going on here. So anyway, our target from a bear point of view, where it needs to hold, or the short target from here, is the cloud and this channel where they come together, which is also 7/8. You can see, you can count that out. That's very clinical there. That's a 2/8, and that's on your daily. Okay, so very quickly, let's go to our energy market. I think it's pretty clear there what's going on, and we are running a little bit behind, and the market's about to open. So oil on the 240, nice little. Unfortunately, I didn't have sound earlier, but this was a very nice trade this morning. Tankin down to Cajun and bounced, and look where you are inside the grid. Pretty clinical. It actually didn't get up to test that break. Very clinical what's going on there. In the bigger picture, remember all these charts are on the weekly. We don't change our little theories, etc. So here we have in the bigger picture, we went through that ad nauseum. 1, 2, 3. We're playing this out. We need to hold all this to maintain it. If not, we then look at the ABC before we would buy it again, right? Unless you had some geopolitical breakout or something. Very clinical there. And you can see how we've marked it. Weekly, more of the same. See how all that fits in together. We went through the 3 time zones. On natural gas, we did gap up. And look what we gapped up into. Right, almost to our 50, didn't quite do it. You got this gap below. Doesn't always fill straight away, but look at that. Now, if this was to be a runaway gap, you can actually see if I was doing point and figure. See the gaps there and there? That could become an island reversal. Right, and let's look at that weekly real quick. There we go. So we had our daily. There we go, our weekly. And so you can see that same pattern right there. It needs to, as you can pretty well see on that daily, it needs to maintain it. We spent forever down here. But if that energy doesn't get paid, for want of a better word, then this all goes to naught, right? So keep your open mind there. We know why that's up. That's up on the freezing cold weather. Not a lot, much to see in currencies. Here's the dollar yen. The dollar yen has been bid the last since here. It actually, the dollar hasn't been going up with the yields until now. Now it is a little bit. This is a 240. So this is your safe haven play. But from a currency point of view, trading point of view, you can see it's retested that, tested the cloud. It needs to get through the tank, and this is a ABC. If it does, think more what this is. This is the US dollar, and this would be rates. Or, here's the funny thing with the yen. It goes on two things, rates, and it also becomes your risk off currency, right? So, I didn't mean to do that. So that's pretty well it. Sorry, the earlier version, we weren't out. I hope you enjoy what we're trying to do here. Let us know. Like, share, and subscribe. Follow us on Twitter, TradersCom, NovaWave. And if you like it, subscribe to YouTube. Thank you. Thank you for listening.